Good morning and welcome to the webinar on fuel excise and fuel credits. My name is Michelle and I'll be your webinar moderator today. Today's webinar will be presented by Chris Sant, Principal and Fuel Tax Leader at Ryan Tax Services. And you will also hear from Richard Calver, Compliance and Workplace Advisor at NAT Road. Chris leads Ryan Australia's fuel tax credit practice and has over 12 years of experience in advising clients across various sectors. In total, Chris has advised over 250 companies in claiming their full entitlement and collaborative worked with the ATO to resolve disputes. Chris previously worked in the Big Four, where he was involved in the 2012 refrigeration and 2016 toll roads Linfox fuel tax credit cases. Chris is also an active member of the ATO's Fuel Schemes Advisory Forum. Like always, we'd love to hear from you during today's presentation. If you have a question, please feel free to type in your question in the Q&A section at the bottom of the screen. You may send in your questions at any time during the presentation. We'll be answering questions at the end of the session. So welcome, Chris, over to you.
Thanks very much, Michelle, and welcome everyone to today's session. It's great to have you. Today's session is to talk about the significant changes that occurred to fuel tax and fuel tax credits in the federal budget last Tuesday night. So what occurred was that in the federal budget, the government announced that the excise rate on fuel, so the fuel tax that's paid on fuel, would be reduced from 44.2 to 22.1 cents per litre. This is a significant change, with the rates of fuel excise being over 38 cents a litre since 2006. So it's a huge change. It is only temporary. The measure has been published in legislation which passed both houses. It will only be effective for a 6-month period, starting at 12:01 on the 30th of March and ending at 12:01 on the 29th of September. On the 30th of September this year, it will revert to the old fuel tax rates. So that has been set in stone, which is a really important thing. When it was announced by the government, there was a lot of skepticism as to whether it would be a permanent change, a temporary change. What's been published in legislation and passed into law is that this will only last for 6 months. You can see there in the table, the old and the new fuel tax credit rates, which I'll go into in various detail. As fuel tax credits directly relate to the fuel excise paid on the fuel, it's a significant change in the fuel tax credit entitlement for companies in the transport sector. Fuel suppliers are saving 22.1 cents a litre from the 30th. And this should be passed on to transport operators in the price paid at the pump. The difficulty is, and this was flagged by the federal government in the budget, is that it's probably not going to be an immediate change, given that the fuel suppliers have significant amounts of stock around the country on which they've already paid 44.2 cents a litre. The government said it will take at least a couple of weeks for that stock to pass through and the lower excise rate to be applied to fuel. So you'll see over the next 2 weeks, the price of fuel dropping by 22.1 cents a litre. That will be a slow change if you use fuel from bulk, if you use fuel at fuel stations. However, it's going to be a more immediate change for companies who have bulk fuel suppliers, where the bulk fuel suppliers are taking that fuel from bond and it's effectively being transferred, most likely already, at the lower excise rate. So in the table there, it shows the old and the new fuel tax credit rates. So the rates prior to the 30th of March 2020 for the full fuel tax credit rate was 44.2 cents per litre, and the new fuel tax credit rate is 22.1 cents a litre. The on-road fuel tax credit rate, that is the rate that applies to your heavy vehicles driving down a public road, changed from 17.8 cents a litre to 0 cents per litre from the 30th of March 2022. In fact, this is a significant benefit for the transport sector, because the road user charge of 26 cents per litre has effectively been reduced to 22.1 cents a litre, meaning you should immediately be saving net 4 cents a litre on fuel used in heavy vehicles on road. So that should be a positive. It'd just be interesting to see how that plays out for each of the businesses. So the big question for operators, and I'll spend 10 minutes on this slide, is how do you calculate your fuel tax credit entitlement on a monthly basis? So the first big issue is what I said before around the rates. So there'll be no fuel tax entitlement for fuel acquired for use on public roads. So there'll be no entitlement for your heavy vehicles driving down a road, which is a significant change to what the transport sector has experienced since 2006, when fuel tax credits started. However, you can continue to claim for activities eligible at the full fuel tax credit rate, although at the reduced rate of 22.1 cents a litre. So activities that will continue to qualify at 22.1 cents a litre include fuel used in diesel forklifts, diesel truck washers, yard tugs, excavators, and other plant and equipment, such as generators. You'll also be entitled to claim the full fuel tax rate still for fuel used in heavy vehicles, off-road, and in powering auxiliary equipment on heavy vehicles. So fuel used in powering refrigeration units will still be eligible at 22.1 cents a litre. PTO usage, tipper usage, and other auxiliary usage will still be entitled at 22.1 cents a litre as well. That also applies to side loaders used in the container sector. So all fuel used in that auxiliary equipment and not fuel used in the truck driving down a public road will be entitled at 22.1 cents a litre. In relation to the off-road entitlement for heavy vehicles, a large amount of operators have moved to claiming fuel used in heavy vehicles off a public road. So that includes fuel used in depots, distribution centres, farms, mines, and other sites. All of that fuel usage is still entitled at 22.1 cents a litre. The issue with all of this will be the fact that the tax office, when you complete your BAS for April and May, will have full transparency of who's claiming these additional entitlements and who's not. Obviously, that's not a bad thing, but the tax office will be aware if you are claiming these items, because your fuel tax credit on your BAS will drop from a much higher amount to, say, 1 to 3% of what it was, reflecting fuel used in these additional items. For refrigerated operators, it might drop to 10 to 15% because you're still claiming for that refrigerated fuel. However, the tax office will immediately see a huge change in relation to your fuel tax credit claims, and that will be obvious to them. The next big thing is the timing issues associated with this change. And this is causing a huge amount of issues for operators around the country. This is that from 12:01 on the 30th of March 2020, the excise rates changed. So the excise rate changed from 44.2 to 22.1 cents a litre. So fuel that's acquired post 12:01 on the 30th of March 2020 will be entitled to a fuel tax credit rate based on the date you acquire the fuel. So if you acquire the fuel on the 30th, your entitlement to fuel tax credits for that fuel will be 0 cents a litre if used in heavy vehicles on road, or 22.1 cents a litre if used off-road, in auxiliary usage, in forklifts, truck wash, yard tugs, etc. This is a huge change for transport operators, many who claim at the moment based on a usage methodology. And we'll talk about this in various details throughout this webinar, but it's a big issue in relation to making sure that fuel that you have on hand on the night of the 30th is claimed based on the right fuel tax credit rate. For instance, if you have a bulk tank on site and you own the tank and the fuel in it, which is generally the arrangement in the sector. Some fuel suppliers obviously own the fuel on your site, such as someone like IOR and other companies. However, generally, transport operators will own the fuel that's on their site in a bulk tank. If you currently claim your fuel tax credit based on when the fuel is taken out of that fuel tank, you might inadvertently claim no fuel tax credit for that fuel. However, you would be entitled to claim the old fuel tax credit rates for that fuel because you acquired that fuel before the 30th of March 2022. That's a significant issue for operators, ensuring that you are picking up your full entitlement and not incorrectly claiming no credit on the fuel in your bulk tanks on the night of the 30th, thinking that you're entitled at the current rates. If the fuel was acquired before the 30th of March, you are entitled to claim a credit at the prior rates. And it's really important that you get that right. So talking about this in more detail. So bulk fuel, you need to assure that you're claiming the right fuel tax credit rate. So companies that have the fuel in the tanks at the 30th, practically, you need to understand how much fuel you held at that date. If you haven't done a fuel dip already, I would strongly suggest that a fuel dip is done of that bulk tank and you work backwards from the dip level today, work out the fuel that's already been taken out of the tank and continue to track that until you claim your full entitlement for that fuel. Another way of doing it is simply making a one-off claim for the fuel in the bulk tank. So say, for instance, you hold 50,000 litres on the night of the 30th of March, and generally use, say, data fuel or other reports to track the fuel into individual assets and claim the relevant fuel tax credit entitlement. What I would suggest was to claim the 50,000 litres at the old fuel tax credit rates applicable to your business in your March BAS. Doing that will ensure you are not missing any fuel tax credit entitlements. And that's a big issue because if you miss the 50,000 litres in that bulk tank, you're probably missing about $10,000 of fuel tax credit entitlements if you treat that as being eligible at the current fuel tax rate of 0, rather than treating it as being eligible at the prior fuel tax credit rate of 17.8 cents a litre for on-road usage and 44.2 cents a litre for fuel used off a public road or fuel used in auxiliary equipment in heavy vehicles or forklifts, plant and machinery. The other issue relates to fuel acquired from fuel stations or petrol stations. The difficulty is that the fuel, as I said before, is fuel on which excise has been paid by the fuel supplier at 44.2 cents a litre. However, your fuel tax credit rate is dependent on the day you acquire the fuel. So if you acquire the fuel today, your rate for on-road usage is 0 cents a litre, whereas it was acquired and has excise paid at 44 cents a litre. So you immediately be worse off in the short term. It's going to cost transport operators around $250 per truck over the next 2 weeks if you acquire fuel from petrol stations. This is a big issue. However, on the back end of these changes, you should experience a similar and opposite benefit. So when the changes occur and the rate goes back to usual on the 30th of September, the rate will change from 22.1 and back to 44.2 cents a litre. At that time, you would acquire the fuel at the petrol station at 22.1 cents a litre, but you can claim it at the 44 cents a litre if you acquire it post that date. There's probably a few planning opportunities that come up for operators around this time in terms of making sure your tanks are full on the 29th of September, and then making sure your tanks are full and then claiming the full fuel tax credit rate for that. That's a significant opportunity for transport companies, but you should have the opposite benefit that you're sort of the negative that you're experiencing now. at the back end of these changes on the 30th. So just remember, it is temporary. It's a 6-month change and the rates will go back to usual on the 30th of September 2022. Practically, any loss you experience in March to April this year will have a corresponding gain in September, October, November this year. However, that's a big issue and you need to be mindful of this when you're claiming your fuel tax credits. The other big issue for transport operators is that your BAS is going to change. So historically, you would have claimed a large fuel tax credit on your BAS, which actually aligned in a lot of circumstances with the margin in most of the transport businesses that we deal with around the country. That number will fall substantially from your, say, $100,000 and will probably fall to, say, $5,000 to $10,000 if you're an operator of that size. That means your BAS will change. So you'll only be reporting the off-road and the auxiliary usage. As I said before, this will mean that the tax office has full transparency as to who's claiming and who's not claiming for those entitlements. So getting those entitlements right is absolutely critical because they'll be fully aware of who's claiming the right rates and who's not. The other issue is you'll have a higher amount of GST payable every month. Obviously, the GST amount will stay the same, but the fuel tax credits to a great extent has minimised the amount that you need to pay on your BAS. 99% of our transport clients around the country are generally in a GST payable position every month or every quarter. And the fuel tax credit claim that they make offsets some of that GST payable. Obviously, that fuel tax is going to drop off when you're completing your return for, say, April, May, or the June quarter. And the amount that you owe the tax office when you submit the BAS is going to rise. Nothing's changed in the GST. It's just the fuel tax claims that you make are going to be lower. So you need to be aware of this. It's going to be a greater amount that you need to pay the tax office, and you need to ensure that you've got the cash there to pay for this. We've raised this with the tax office over the last 3 days as a significant issue. And the tax office has basically come back to us and said that they will offer extensions to clients over the coming months to pay their BAS in the event they're experiencing these practical issues. So I would advise that if you have an issue in terms of the paying these BASs over the next few months, is to reach out and we can help you with organising that request. Alternatively, speak to your accountant and make them aware that you can request an extension to pay your BAS over the next few quarters. However, this is not a solution. This is simply the tax office pushing the issue down the chain. What we've raised with the tax office is that they need to address some of the fundamental issues as a result of these changes. The first fundamental issue is that if you acquire fuel at petrol stations, you will be worse off in the short term because the excise on that fuel is paid at 44 cents a litre and there'll be no corresponding entitlement to those fuel tax credits if you acquire it post the 30th of March. So we've told them about this issue, and with NAT Road's support, we'll be pushing this issue because we think it's actually an unsatisfactory outcome for the transport sector. The other issue is obviously now is a good time to complete a review of your entitlements. So the tax office is obviously going to be fully aware of who's claiming for these additional entitlements and who's not. Your BAS profile will change. And as you know, you only report one item to the tax office on your business activity statement. So what we would urge you to do is complete a review of your fuel tax processes. You can still go back 4 years to recover any unclaimed credits from the tax office. Nothing's changed in relation to that. And you can still recover the higher fuel tax credit rates for fuel acquired and used over the last 4 years. So what we would urge you to do is, if you haven't done a review, is to actually embark upon that process. One other issue with doing a review is making sure you do it in a timely manner. Your BAS will change, as I said before. You'll be claiming, say, $100,000 of fuel tax credits a month, and that will change to $5,000 a month. The tax office analyses these trends on all operators. And if you go from 100 to 5 to 5 and then back to 100, then back to 5, it might flag an audit. So one of the practical fallouts of this is that you should be considering review in the near term, so that there isn't such a stark change in your fuel tax credit entitlements. Before I run on to a few examples, I just wanted to go back quickly and just re-show you the rates. So as I said before, the rates on fuel tax credits for fuel used in heavy vehicles travelling on a public road was 17.8 cents a litre for the prior to the 30th of March 2022. The new fuel tax credit rate from the 30th of March 2022, so that is for fuel acquired from the 30th of March 2022, is 0 cents a litre. As I said before, fuel held in bulk tanks as at the night of the 30th on your site is still eligible to be claimed at the higher fuel tax credit rate because you acquired it before the rate changes occurred. So doing a stock take, a dip of that fuel tank and making a one-off claim for that tank is critical. Obviously, you won't be able to claim those credits coming out of the bulk tank over the next few months. However, it's very important that you do not inadvertently miss the fuel in the bulk fuel tank as a result of these changes. All other business uses of fuel, as I said before, so that's fuel used in auxiliary usage of heavy vehicles, fuel used off a public road in heavy vehicles, forklifts, truck washers, and other things, were previously entitled at 44.2 cents a litre and will be entitled at 22 cents a litre from the 30th of March 2022. Again, there's a huge difference in those rates. As I said, you should be saving immediately you should be saving over the next few weeks the 22.1 cents a litre off the fuel price. However, there will be some transitional changes as a result of that. What I wanted to do is just run through a couple of examples, and I've talked about this already, but I'll run through it again because it's absolutely critical before Richard talks about NAT Road's efforts, and then we open it up to questions, and I do expect a lot given the significance of these changes. So the issue that many operators have come to us with is the bulk tank issue. So I currently have a bulk tank on site that the business, along with the actual fuel, owns. So the business owns the fuel and it's not owned by a third party. I use data fuel records to claim when the trucks are filled up from the fuel tank. As I said, you're at risk of underclaiming if you change the fuel tax credit rates in your system on the 30th of March, because all of the fuel in the bulk fuel tank is eligible at the old fuel tax credit rates. You should do a dip immediately to make sure you are claiming the right fuel tax credits, and consider doing a one-off adjustment for the fuel that's held in the bulk tanks around the country as at that date. Doing your claims on acquisition methodology is always preferred. We always advise companies to do this to make sure you are claiming the right fuel tax credit rate. If you have a bulk tank on site and the fuel is owned by a fuel supplier, which is often the case with companies around Australia, like the petrol stations, there will be an issue over the coming weeks. That fuel supplier has paid excise on that fuel at 44.2 cents a litre, and they will be charging that onto you. If you acquire that fuel post the 30th of March, your fuel tax rate for on-road usage will only be 0 cents a litre. For off-road usage, it's 22.1 cents a litre. This is a big issue for operators who use those fuel acquisition methods and fuel suppliers. Practical advice to those operators is to ensure when the rates change in September that the volume of fuel in that fuel tank is the same as the volume of fuel on the 30th of March or is greater than the volume of fuel at the 30th of March, because the opposite will occur. The fuel in that tank would have had 22.1 cents a litre in it, and you'll be entitled to claim at 44.2 if you acquire it after the 29th of September. So a practical piece of advice is if you have 50,000 litres in that bulk tank and it's held and owned by a fuel supplier and not the trucking operator, make sure that that is at least the volume that you hold in that tank as at the 29th of September. If that's the case, you shouldn't be losing out at either end. You could even ask them to put more fuel in that tank at that date to ensure that you're claiming the higher fuel tax credit rate on fuel which actually has the lower fuel tax embedded in it. So that's what I would suggest to you, is to speak to your fuel supplier if they own the bulk tank on bulk fuel on site, and talk to them about what you expect them to do on the 29th of September to make sure you're claiming your full fuel tax credit entitlement, and that you offset the issues associated with the timing difference that occurs in this space. The other issue, which we'll touch on again, is petrol stations. So obviously the prices have gone down a bit, but not as much as we expect, not as much as 22.1 cents a litre. The issue is the fuel tax is being paid when it leaves the terminal at the old rate, and the old rate is embedded in the fuel. The fuel tax credit rate is determined based on when you acquire the fuel. Again, we've raised this with the tax office. This is a significant issue where fuel tax is being paid at, say, 44.2 cents a litre. However, the rate for on-road usage in those heavy vehicles, if you acquire that fuel post the 30th of March, will be nothing. So this is a large issue for operators, which will cost operators about $250 per vehicle over the coming weeks. Obviously, you should experience the opposite in September, but the issue for the sector, and we'll be helping NAT Road with this, is keeping the fuel suppliers honest in September and making sure they don't increase their prices by 22.1 cents a litre overnight when they shouldn't. The excise in that fuel in September is most likely going to be the lower rate than the higher rate. So that's going to be a big practical issue for the transport sector. I wanted to hand over to Richard now to talk about NAT Road's response to these changes.
Thanks very much. Well, first of all, the effective benefit of 4.3 cents a litre to our industry compares with the mums and dads who are getting the full 21, 22 cent benefit. That 4.3 cent per litre advantage is really a paper advantage only, because what the government is saying is because the road user charge that is taken out of every litre of fuel is 26.4 cents a litre, and the excise is now 21.2, we're effectively 4.3 cents better off. Had a flood of calls, that tell us that when you take into account the cash flow issues that have been so well articulated, and when you apply the supposedly lower index prices under contractual fuel levy provisions, many members are worse off. Many members are worse off. And if you have a look at today's Australian, we've articulated that and had it hit the major media. Today, on page 4 of the Australian, there's an article, tax snub for truckies to drive up food costs. So in other words, we're saying that wherever possible, members are going to pass these costs on. And we've been talking to politicians, both in the government and in the opposition, about this problem. as well as the problems that have been well articulated about cash flow and the unfortunate fact that there'll be 3 different fuel tax rates in the March quarter BAS for many members. So as it says here, we're going to continue to vigorously pursue this issue and make it an election campaign issue as well. Part of the problem may be that if there's an election called later this week, no action can be taken because they'll be in caretaker mode in government, which is why we've done all of these letters and submissions urgently to try and get the road user charge reduced so that fuel tax credits can be restored. Michelle, over to you.
Thank you, Chris, and thank you, Richard. So we'll start with our first question. In completing the BAS for March, how do we deal with 31 March 2022, as it seems on that day I can't claim any fuel tax credit? That seems unfair when the Bowser price hasn't changed.
Completely agree. It's completely unfair. So what's occurring is that the Bowser price wouldn't have changed. The excise embedded in that fuel is payable by the fuel supplier at the higher rate. However, due to the way the fuel tax rules work, the fuel tax rate is determined on the date you acquire the fuel and not the excise in the fuel. And this is a huge issue because it's going to cost you money over the next few fills of your vehicles. However, it's a sort of a long-standing issue. So obviously when you go to the petrol station and buy fuel, the GST is listed on that fuel invoice. However, the excise is not listed on that fuel invoice. Excise generally is not listed on any invoices. Excise is payable on fuel, tobacco, alcohol, all the good stuff, but it's not listed. So the general punter doesn't know this thing exists. And that's caused a huge issue because they've had to set the fuel tax credit rates based on when you acquire it and not based on the underlying excise paid. And that is a huge problem for operators. And this is what we've raised with the tax office and said they should immediately, with NAT Road support, and said that they should immediately consider an administrative easement to allow transport operators to claim the higher fuel tax credit rate if they are aware or can assume that the higher rate of excise is being paid on the fuel. So that's something we're pushing with the tax office. The difficulty will be getting that from the tax office, and if it needs to be, say, a legislative instrument, to Richard's point, getting government to do that over the coming months will be impossible. So we will continue to push the tax office with NAT Road support. I'm just very concerned that the transport sector is just going to have to bear this, and that's not going to be a suitable outcome for truckies around the country.
Thank you. Our next question, is it correct that the excise will go up again at the end of September? If so, will we definitely get our fuel tax credits back?
Yeah, so it's when the government announced this in the budget on Tuesday last week, there was obviously some skepticism as to what they would do and whether it would be actually permanent or temporary. In the legislation that was passed through both houses of parliament, it is in black and white writing that went through both houses of parliament that it will change to the old rates from 12:01 on the 30th of September this year. So it will go back to the old rates on that date. Politically, it's a bit of a hand grenade where they pulled the pin and left it on the table, given that any government that's in power on the 29th of September this year is going to be seen as being responsible for a overnight change of 22.1 cents a litre in the fuel price. And to the point of one of the questions, this is all political. It's all political. It's all about winning votes and undermining what's happening at the end of the year in September. Practically though, we've just got to make sure we give you the right advice around your claims, and you continue to claim your full fuel tax credit entitlement from the tax office. Notwithstanding that number is going to reduce, you obviously want to make sure you're claiming the full amount.
Thank you. We have another one where we have bulk tanks on site, but fuel still belongs to our supplier until we draw the fuel. What happens to the fuel in the tank before the change, drawn after the change?
Yep. So if your bulk fuel supplier still owns that fuel, which is the case with some suppliers around the country, they will obviously have paid the 44.2 cents a litre on that fuel. If you draw or acquire that fuel post on or after the 30th of March, so from 12:01 on the 30th of March, you'll only be entitled to credit the lower fuel tax credit rates. I was speaking to a client yesterday who has about 850,000 litres of fuel in bulk fuel tanks around the country that is held by one of these fuel suppliers, and it's all used off-road in their circumstance. And they'll be entitled to 22.1 cents a litre and not 44 cents a litre on that fuel. So it's going to be a significant issue for them in the $100,000 to $200,000 range. But for most operators, it's still a significant issue. The way around this, as I said before, is engaging with those bulk fuel suppliers and ensuring that the fuel in the tank, when the rates go back, is at least the volume that was in there on the 30th of March, because you'll go from 44 to 22 on the 30th of March, and you'll go from 22 to 44 on the other end of these changes. So you'll be entitled to claim a lower rate on the front end, but the higher rate on the back end. So you need to engage with those fuel suppliers, if that's your practical circumstance, to make sure you claim your full fuel tax credit entitlement, and that the fuel tank has at least the volume that was held on the 30th of March as at the 29th of September this year.
Thanks. How will this affect how we charge a fuel levy on invoices, or how those that dictate fuel levies to subcontractors adjust their fuel levies?
So the fuel levies point is a real issue, and Richard might have a few comments on this one as well. Obviously, there's various ways that fuel levy is effectively calculated. There's sort of the common way where the fuel tax credit is taken into account in that fuel levy, and obviously the fuel tax rates change, so that levy will change. Other clients have fuel levies where it's actually set based on the amount of the road user charge that's in play, which is 26.4 cents a litre. That's a real difficulty for those operators, because the road user charge has effectively dropped by 4 cents a litre overnight. So it's dropped from 26 to 22. However, in law, it's still 26. So working out how those contracts and how those levies operate is going to be a big issue, and you may be worse off if that's how your fuel levies are structured. As I said, there's a lot of different ways these fuel levies are structured, and it should just flow through the equation. However, there is different wordings, and some operators may be worse off based on the way these changes were implemented. Richard, do you have any comments on that?
Yes, I think that you have to look at the individual provision in the individual contract and do the numbers, and then work out the effect it's going to have on your enterprise. Other than that, it's very difficult to have a common response to fuel levy provisions, other than to say, yeah, work out the numbers based on the changes that have been explained today.
Yeah, and I think further to that, I think the overarching point of all these changes, and the fact that, you know, your BAS is going to change, your cash flow position will change, is to be very careful and closely monitor. Get the finance guy or girl in the business to be very conscious of what happens over the next 2 to 3 months. The reason I say that is you should be better off by 4 cents a litre. However, and this is a big however, things are going to change. You're going to be paying more on your BAS every month, and you're going to be saving 22.1 cents a litre on the price, but that doesn't actually translate to an actual benefit because of your fuel tax entitlements as the transport sector. So I would look at your sort of net position from a finance perspective for March, April and May, and ensure that aligns with what you think it should be. There's probably going to be a few operators that look at their finances and look at the books over the next few months and something goes awry, something's gone wrong because of these changes, because the benefit doesn't actually flow through to the business how it should. So be very careful and get your finance people to be very conscious of this. There's going to be a bit of a teething period over the next few months, and we don't want you to be worse off. So be very careful of what's in the books and what you do over the next 2 to 3 months.
Another one, what about fuel inside the fuel tanks of my trucks?
Fuel inside the fuel tanks of your trucks. So generally that's probably already claimed by you. So for instance, you might have 1,000 litres sitting in one of your prime movers. Your fuel tax credit rate, you would have acquired that fuel prior to the 30th of March, and you've most likely already claimed that on your fuel tax entitlement. Because if you use, for instance, fuel cards or a petrol station or whatever, you've obviously got those receipts for the transaction that occurred prior to the 30th of March. If you use a bulk tank, you've either claimed because you claim based on the fuel being loaded into the bulk tank on an acquisition methodology, or you've already claimed because you've already run the data fuel reports, and the data fuel or other company reports have said that fuel's been drawn down prior to the 30th. You obviously still need to be conscious of that because obviously it's a bit of a change, but you should have already claimed for that fuel because the date of the transaction, either on your bulk fuel statement or your fuel card statement, should be before the 30th of March.
Thank you. Here's another one. Hi, Chris. Are you saying that transport operators only get a benefit of about 4 cents per litre, but private fuel users will get the full 22.1 cents per litre? In your view, is this nothing more than an election ploy rather than a measure to actually assist the transport industry in a time of rising fuel costs?
Yeah, so as Richard articulated quite well, this 4 cent a litre benefit is probably not going to be materialised by most operators. These whole changes are obviously very political and will continue to be political until they revert to the original fuel tax credit rates. As Richard said, also the average person on the street, including us when we drive our personal vehicles, will experience a 22.1 cents a litre benefit. For your trucks, it'll only be the 4.3 cents a litre benefit, which is a big issue. And that's obviously why NAT Road is campaigning very hard on your behalf to try and get this rectified, try and get the benefit to match up between private individuals and the trucking sector. And, we're obviously supporting them in that because we think it's an equitable outcome as well.
Thank you. What is your thoughts on the impact of processing a monthly fuel levy for base freight rates that has been part of the industry for quite some time? After 30th March, the pump price should be 22.1 cents per litre cheaper, but can't be guaranteed like our FTC was in our BAS.
And this is the big issue, right? The big issue is around the fact that, and Mr. Frydenberg said it in the budget. He said people will not experience this benefit for at least 2 or 3 weeks, and that's what was articulated. Is that you won't be able to, to claim that benefit because you'll be paying the higher excise rate and passing it on, and being entitled to the lower fuel tax credit rate. So this is a significant issue. The problem is the fuel levies and the way that the calculations work are obviously subject to each individual operator's the way it's drafted. And if you've got any further questions about that, we're happy to answer it, but it's very fact specific.
I have one for Richard here. When will the NAT Road's fuel levy calculator be updated?
Well, for the moment, we've taken it down because some of the basic assumptions on which it's built no longer apply. And I've been having discussions with one of the original designers of the levy to look at some numbers that we might meaningfully put up. The question of whether or not it's worthwhile for members to have a revamped one for the next 3 months is still in the mix. So for the moment, we've just taken it down because it no longer reflects the legal reality.
Thanks, Richard. Back to Chris. In which BAS will a back claim become more obvious?
So your March BAS is going to be sort of business as usual, except for fuel acquired on the 30th and 31st. From April, obviously, you'll be claiming the lower rates. So from, I would say, the May, June business activity statements, if you were to go and submit a back claim at that time, because you can put it in a single BAS, the tax office alarms are probably going to go off at that time, because you're going to go from a large amount to a 1 to 4% of the amount you claimed, and then after that go back up to a higher rate. So be very conscious of that. Make sure that any back claim is, reviewed twice, and it's absolutely spot on before it's lodged.
Thank you. Another one for you, Chris. In calculating fuel levy for a customer using AIP TGP data, given we are unable to claim the excise, we will be worse off versus prior to this change. My reference rate with all of my customers are inclusive of full excise, of which I can claim back 18 cents per litre, but now I can no longer claim it back. Is there any chance of this changing through current discussions? And does the government acknowledge the error of this change?
Obviously, that the prices that will be published obviously will be down by 22.1 cents a litre. The difficulty will be that that's obviously going to have a timing difference. So in real terms, you should have it shouldn't impact you, in the coming weeks, but it will continue to impact you while those prices are high. Again, very interested to speak about your specific fuel levy circumstances. As Richard said, it's very fact specific.
And we have our last question. What can we expect from the ATO in terms of audit activity over the next few months? Will they be understanding that things are currently complex, or is this a good chance for them to review?
The tax office fuel tax team's been run off their feet over the last few years because of the huge amount of back claims that have been made by people in relation to off-road usage. Generally, they run an algorithm in their systems where they track the 7D amount by operators. So they look at the 7D amount, and if it goes up by a certain amount, they'll ping it in their systems, and they might look at that and then give you a call. The tax office, I would fully expect to give operators, a break over the coming months. Mostly because their algorithms are going to be worthless, I would say. It's all going to spit out random results, and they're going to get a lot of false positives. There's no guarantee, though, with the tax office. They are an incredibly aggressive organisation at the moment across the board, more so than there ever been in the 13 years that I've advised clients on tax matters. The tax office and the people leading it at the moment are very keen on ensuring that, absolutely everything is 100% spot on, rather than tax officials in the past where there was a bit of give and take and acknowledgement that, some of these calculations, do have assumptions in them and the like. So I would hope they give everyone, a bit of a free ride over the coming months, particularly over the next few BASs, which you think they'll do because everyone's BASs are going to be going everywhere in terms of the amount. But there's no guarantees with them because they're just a very difficult organisation to deal with.
Actually, I have one more question. This one is to Richard. Will NAT Road be providing a template to explain to customers why we are not passing on the full 22.1 cent per litre on our fuel levy charges, seeing as we are only getting 4.3 cents per litre?
I'm not sure that a template is appropriate, given that the emphasis on the individual fuel levy provisions and individual contracts is commercial in confidence, and we can't deal with commercial in confidence information under the competition and consumer legislation. I would imagine that the fact sheet that the Treasurer published on the night of the budget can be made available, and that explains that only 4.3 cents out of the mouth of Treasury is going to be passed on to the industry. So we can make that fact sheet available on our website or as part of an adjunct to this particular webinar.
Thanks, Richard. So that concludes our webinar. Thank you, Chris and Richard, and thank you everyone for attending today's webinar. If you have any other questions, please send an email to info@natroad.com.au and we will pass this on to Richard and Chris to get your questions answered. Today's webinar will be uploaded to the website, so please share it with your colleagues. Have a great day.